Hello and welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by Alexis Gray, European economist for Vanguard. Hi Alexis.
Hi.
So yesterday we heard from the Bank of England that the MPC had made the decision to hold rates in September. However, a closer inspection of the minutes show that they will possibly be cutting rates in November. We've had positive economic data since Brexit, so why would they be considering a rate cut in November?
Well, I certainly think it's true, Emma, that in the last few weeks that the economic data for the UK has been better than expected. But let's put this into context. I think after the Leave vote, it's clear that this Brexit story has had a negative impact and that the UK has headed into a sharp downturn. Now, whether or not that's going to be an outright recession remains to be seen. But I think given the position that the economy is in now, which is quite soft, it's prudent that the Bank of England has done such a big stimulus and is leaving on the table the possibility of a rate cut. In fact, what they said yesterday was that at the November meeting, if we continue to see soft data, that there's likely to be a policy cut. So we'll get interest rates dropping close to zero. I don't think it's clear, though, whether we're going to get further quantitative easing, but a policy cut seems more likely than not.
And one of the things that we have seen on the ground, the impact of Brexit, has been a weaker sterling. And to cut rates further would indeed support that low value of sterling. This has not been positive for UK holidaymakers, but it is actually quite good for the economy, isn't it?
That's true. I think the sharp depreciation in sterling is actually a buffer to the economy when it's going through this sort of soft patch. I mean, I think the effect of Brexit is to raise uncertainty. So right now for a UK business, they're not clear exactly what the relationship will be with the European Union going forward. So what we're seeing is businesses holding off making large investment decisions. And so I think if you see that fall in sterling, it actually raises the competitiveness of local businesses. They're selling to foreigners and now they look a lot cheaper. So that's good news. Now, of course, there's this, upside and downside to a weaker sterling. For a holidaymaker going abroad, it's more expensive, but as I said, it raises the competitiveness of UK businesses. So, I think on the whole it's a good thing.
And of course, yesterday wasn't just the latest MPC meeting, it was also the 8-year anniversary of the collapse of Lehman's, the bank which sort of signalled the beginning of the global recession. Before we had the Brexit vote, there were a lot of people suggesting that should Britain leave the EU, we would actually undo all the growth that we have made as an economy since that global recession. Do you think we're heading in that direction?
Look, I think the collapse of Lehman Brothers was a very significant event, but not really comparable to Brexit. I mean, Brexit is sort of an isolated UK event. So far, we've seen that the negative consequences on the economy have been, for the most part, isolated to the UK. We haven't seen much of an impact in Europe, and certainly in the US and China and other sort of countries further abroad, we're not seeing much of an impact. Now, Lehman collapse was a global recession, a global financial crisis, so much larger event. And I also think with Brexit, we're still early days. So although we know we're going to leave the European Union, we don't actually know how that trade relationship is going to work, whether immigration flows will be cut off. There's two sort of broad pathways we could take, which is a hard break, a hard Brexit, where, as I mentioned, all the trade links and immigration slows down, or a softer Brexit, which is similar to what we have today. But that uncertainty alone, I think, will weigh on the UK economy, but we can't see yet how big this is going to be.
Alexis, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.